Welcome back, traders. It's TK for ReadySetFutures.com. It's the 7th of October, and this is your daily market wrap-up. Let's get right into the headlines. On the ES today, it was all about the jobs report and possibly that big gold dump we had around 8:30 this morning. Crude lost the $50 mark today on an increased rig count coming out of the Baker Hughes report. Gold, somebody took down some big stops today around 8:30 this morning, and crude selling back off to its developing volume weighted average price since its overnight rally. Before we get into the nitty-gritty of it, guys, I want to give a big welcome and a big shout out to our new subscribers and our new viewers. Guys, if you like the videos, feel free to click that thumbs up, like it, subscribe if you want to, and don't be afraid to share this stuff. If you find someone who might, see some value in what we're doing here, by all means, share it on your Facebook, VK, whatever you want. It's yours to share. So let's get right into it. This is our copper hourly chart of copper that we tend to look at first in our series. We have our two volume profiles here up on the chart. One of them out since July, the other here since September. We've come down and we have concluded what we had thought was was a trade off of $2.20 or so, coming down here to our developing volume weighted average prices and our volume point of control around $2.15, $2.16. Copper caught a bid in the overnight, there's no doubt, but sold off right as, and we'll look at it here in a few minutes, this gold chart. We had a number of heavy selling taking place in the gold market around 8:30 today, and that seemed to change the narrative in today's action. So copper, no exclusion to that. As you see, selling back down here into its developing volume weighted average price at $2.16 and a quarter. Again, that's copper's action on the day. Not much else to say. Bit of chop around our VWAPs as expected before we ran up here to 218 and ran stops there before and selling off. This is quite a sell-off off of that bit of a stop run here. So definitely found some sellers up here. Definitely had some aggressive selling action back into volume weighted average price today. That's all I'm going to say on copper. Moving over to gold. Gold, here's our hourly chart on gold. We're going to take it out and then take it back in just so you guys can see how this is all setting up. This is the 4-hour chart on gold. Our larger volume profile is since Brexit, and our nearer one here is since this most recent sell-off. Now, if you've been listening to us for any length of time, you know we've been saying gold long, short before it's long. We've seen the short play, and we anticipated down here to $12.58. $12.60 was really our target. Moving into the 4-hour action, you can see we saw thin trading volume on the way down, and now we've begun to build, and you can see our volume point of control has shifted down to 12.56. Again, this is just for the term down since here earlier in the week on the 3rd of October. What I want to draw your attention to is this bar here with the long wicks on either side. I'm going to pull up another chart here. I'm going to pause the video, come back, and we're going to see a bit of a different chart also from today, and I'll explain that when we get there. And we're back, traders. So on your screen, this is also the gold market from today. We've got our gold QGC 5-minute chart of today's action. This is a volume profile simply of today. I've got one more thing on the chart. This is the VIX index on the day. You may or may not, pay attention to VIX throughout the day, but what I do want to show you guys is some of the volume action that we saw today. So here we have around 5:30. This is when the jobs report came back. So big bid in gold. Here at 5:30, and then again at 8:30, we had another large sell action that occurred, driving price down. What I'm going to bring up next to you is what we call just a volume breakdown, and this is actually filtered by order quantity. So a minimum number of contracts need to be traded on a per order basis in order to register here. And what we can see here coming right out of the jobs report, we had about 435 of these of orders, right? 435 contracts in greater than 10 order increments, in greater than 10 contract increments, hit the ask right here after the jobs report. This is not unexpected. It's the jobs report, right? This is big, especially considering the jobs report miss. The insinuation here is that we missed on jobs. The Fed will not hike come November, come December, and so gold should appreciate in relative dollar terms. We all know gold is intrinsic in value, right? And doesn't it change? It's just in the way that it's measured through the dollar. This is atypical right here at 835. So between 830 and 835, we had almost double what occurred at the jobs report. And for no particular reason, maybe other than it hit $1,250. This is kind of an interesting inflection point in the gold market, and is either indicative of someone taking on extremely large short positions or selling out of their longs, right? And that's what I have a feeling this is more so than anything. You probably had some price-based stops here at $1,250 an ounce, and they got triggered today. And that's what we were talking about. That's why we feel gold was short before it's long, right? So now these longs, they had to sell into somebody, more buyers, right? So, this was quite an interesting day in the gold market and quite interesting action leading up to this 8:30 time frame. So it'll be interesting to kind of see what happens from here on out in the gold market. As we said, gold higher after it's short. So this might be the catalyst, but it depends on what this was. It certainly was selling volume that hit the bid, and so was that volume intended as someone taking on a short position, or was it really somebody selling out of their longs? Only time will tell. But that was our market action in gold. So keep 830, 835. You can see this big run up in VIX at the same time that this occurred. So just kind of keep that in mind as we look at some of our other markets. I'm going to pause the video again and go back to our previous chart, and then I'll be right back with you guys. All right, so we're back. This is gold again. This is the 4-hour chart that we were looking at before. Interesting stuff in gold today. Let's head over to crude. This is a 4-hour chart on crude. This is the day's action. These two last bars, and you have just the Globex finishing out here. We're gonna zoom in. We'll zoom in here to our 5,000 volume chart. Today, again, we lost that $50 mark just around 8:30, right? If we zoom in, here's 7:30's action, and at 8:30, boom, right there it is. Here's when gold had its action, we saw a definite reaction in the crude oil market, and it's continuing. So volume point of control on crude, at least since our agreement to agree with the Saudi ministers, at 49.80, currently trading below that. But we have a ways down to find fair value here at our developing volume weighted average price, which currently sits at 48.20. Interesting stuff on crude. It was quite the reaction off of that offer in gold. So we'll see how this ends up playing out later in the week. We also got the Baker Hughes rig count here around 11 a.m. and you can see some additional chop before we sold off into the close. Lastly, out on the ES, you guys know I was short on the ES. If you watched yesterday, I had gotten into a position at actually the day prior to that, 21.54 short. And my target's down there somewhere around in the upper 2120s. We're going to see what happens when we get there, if volume dies off or not. I do believe it's going to get there. I was hoping today off of the jobs report. Today was a bit of a misnomer when we look at jobs. Ever since first quarter of 2016, it didn't matter if the jobs report beat or the jobs report missed. The market was bid that day. Today, not so much. So we get the jobs report here at the, well, let me zoom in and show you guys a bit better. 1200 tick chart here on the ES. With gold opening up here for the jobs report, this area here was the rally. Short-lived, mind you, up to 2161, and then the market just rolled over. So it was bought with both hands, that report, no doubt. But couldn't be held, couldn't be sustained. And we're going to zoom out again just to give you guys more perspective, right? Because perspective's key in these markets. You know, if you guys are day trading this stuff, more power to you. But I rather sit back and swing trade it. 5-minute chart, bit more telling. We have these this thick red line here and this thick red line here are our value area boundaries from, I believe, the hawkish hold that we had Yellen talk about. Getting off of this, yes, that's exactly what those red lines are. This volume profile here is exactly when Yellen paused last. The red line, or excuse me, the thick green line right in the middle of your screen at 2153, that is our volume point of control since Brexit. It's also our volume point of control here since Fed Yellen, her move. The developing volume weighted average price since the Fed, 2152.50, and since Brexit, 2142.25. Today was all about 2140, 2139. As you see, these past three swings down, price was bid and bid heavy off of this level. And since those levels, we've been getting progressively lower on our swings. So 2167 was the first back here at the end of September. Ran stops here on the 30th of September up at 2167, 68. And we have since been running lower. We ran stops today off of the job report at 2157, 2158, and 2160. And then we turned lower, which is interesting that it's coincident with this move in gold. As you can see here, gold and the ES continue to both sell off. I'm going to zoom in just so we see it a little bit better. Here's our 830 bar. Boom. Right here. What happened after? We sold off. We sold off right down into the lower value area boundary before we picked up a consolidation zone and we moved higher. Interesting to note, let me throw up a quick volume profile just on the day's action. Actually, the day and the jobs report, and you can see pretty clearly what happened after we came down here and got busted at the lower value area boundary. Price came right back up to the volume point of control and just hacked around the volume weighted average price until the close. And the close was not pretty. The close, we had quite significant volume at the close and on the ask. So I'm gonna pause this real quick and bring that up just so you guys can see it. Okay, guys, so here is that volume breakdown on the day. You can see it underneath our traditional price chart. Still the same 5-minute chart action that we had on the day last. But this big finger down, you see at 1300, over 6,700 contracts sold off right in the last 5 minutes of the market. And these are orders that are in blocks of 10 or larger. If we wanted to see blocks of 100, let me do that real quick. Yeah, so this is now just blocks of 100. Quite interesting. Off of the jobs report, you say, oh, the jobs report was bid. Yeah, it was bid, but it was bid right into these massive sellers. These are blocks of 100 orders or more. differentiating quite a bit of action as opposed to what you might have thought was, a bid market. Not so. Same thing here on the close. Also, 1,000 orders at blocks of 100 or more. Excuse the hesitation. I want to make sure I've got it characterized properly for you guys. But that's today. So it was an interesting day in the market. It was an interesting week in the market. I'm still short. I'm hanging on over the weekend, Evel Knievel style. So that's what we're doing. It's the system. It's the trade. And for me, I plan my trade and I like to trade my plan. So again, welcome to all of our new subscribers and welcome to all of our new viewers. We really appreciate you guys being here. If you like the material, like it. If you really like it, click subscribe and share it with your friends if you think they can benefit from it. That's what we got for you today, traders. I hope you had a tremendous week. I hope you have a kick-ass weekend. And I'll see you here over the weekend for a weekly wrap-up and then back earlier in the week for your daily market wrap-up once again. So signing off on the week, it's TK for ReadySetFutures.com.